Welcome to the Business Startup and Growth Essentials webinar. My name is Jane Pallister and I'm presenting a series of slides which goes through the rudiments of starting up a business and also establishing a growth phase for the business. This is a Wednesday Wisdom webinar and it's being delivered in partnership with Staffordshire University, and this is part of the Be Inspired project. I'm just going to run through 10 points that I'm going to cover in the content of this webinar. So the first point really is to do your homework. It's critical that you draw together as much information as you can from which to make your assessments and your decisions about either starting a business or moving that business forward in terms of growth. Second, to take a close look at the market and the type of customer that you're targeting. The third point is to learn as much as you can about potential competitors and the pricing spectrum, and I will go over why the pricing spectrum and knowing what that is so important for the business. Then we'll look at organising your business operation and how to look at capacity management and quality delivery of your products and services. The fifth point is going to cover off how to be COVID safe and to safeguard your customers, your employees, suppliers and your systems. Then we'll look at working out your personal living expenses, your business overheads and your likely tax payments, because these are going to form the basis of the sort of income you're going to need to generate once your business starts to get a bit of traction. We'll be looking then at sorting out how you're going to live financially until the money starts coming in. Then I'll go over the basics of how to do a cash flow analysis, what this is and how it helps the business. Then we'll look at your marketing and sales and areas like your core message, a call to action, the medium you're going to use to deliver your communications and a call to action and tracking. And then the formalities, registering with HMRC, your banking, keeping records and other stuff. And then finally, I will just share with you some free business support resources that you can tap into. So the very first element is do your homework. It is so important that you research as much as you can, because this information that you pull together is going to tell you all you need to know. And when you do this during planning for growth, doing this on a regular basis as a new business and as a basis that's going into a growth phase, means that you will be working from good solid data, and this will help you make some really important decisions for the business and it will help you move the business forward. When you first start your business, it's really important to do this on a very, very regular basis, because it's going to be a steep learning curve. We may recall when we left school, a lot of us felt that in our first year of working after leaving school, we learnt almost as much as we did in our entire school years. And it's the same in business. It can be a steep learning curve. And then after that, you can possibly just take your foot off the gas a little bit and then just do this research more periodically. It might be a month, a quarter, twice a year, maybe annually. It depends on the speed at which your particular sector goes, but particularly after a trigger event. So if a new competitor has come onto the scene, or you've lost a group of customers, or something within your marketplace has materially changed, then this is an important time to go back to basics and start looking at pulling together some fresh information which will refresh and update the business and help you plan from. The sort of things you're going to be looking for are market trends and social attitudes. Now, there are lots of sector federations who produce guides and updates, and these are a very good source of information. When you have a sector federation that has a member base, often the funding from those memberships go towards specialist reports being undertaken for that particular area of business. So I'm not recommending that membership of such a federation is an absolute must, but it could be very useful because they're doing all the research on your behalf. Secondly, you need to look into customer types. So what kind of people are you going to be chasing and communicating with and marketing to try and get them to be more aware of you, to begin to have confidence in maybe contacting you and ultimately to buy from you? What are their characteristics? What are their behaviours? We also need to look at legislation and the economy. Now, in terms of legislation, there's a lot of generic or general business legislation that applies simply to the act of running a business. And then there may be sector-specific legislation that you need to be aware of specifically for your kind of business. You need also to have a look at the economy. It could be the local economy, the regional economy, and the national economy, and especially as we have a situation globally which is an absolute first. It's very difficult to predict how severe an impact this will have, but we know it's already having that impact. But it's not all negative. For some businesses, there will be major opportunities, and for others there will be an opportunity to create new kinds of businesses. So even with situations like COVID-19, things like this and events like this do spur new kinds of businesses. You also need to look into your marketing communications, what mediums you're likely to use, and to look at where your target customers normally go for their information, because essentially that's where you need to be marketing yourself. Something that's really important is that you need to look at competitors. You need to look at what reputation they have, how they promote themselves, what they say about themselves, what people say about them, how good they run their business, and also the ones that aren't good competitors or don't run a good business, what bad practices do you want to learn about and avoid? What good competitors' practices do you want to learn about and copy within your business? Because this is benchmarking, and this is looking at a standard that's set, that is something that you definitely want to achieve and certainly excel. And as I mentioned in the slide before, the very important thing you need to be looking at is your pricing research. You might get this by being a mystery customer or getting someone else to make an inquiry on your behalf. You might get this from websites, from Facebook and social media sites where competitors may be sharing some pricing information. You may need to speak to suppliers, customers of theirs, and also potential customers of yours, at what kind of prices they've been working to and what sort of amounts they've been paying for the products and services that they've had from competing businesses. The reason why pricing levels are so important is because you need to know what pricing levels exist at the value end, the mid-market, and the exclusive end of your particular marketplace. And you need to be somewhere on that spectrum. What is really important is that you do not try and buy your share of the market as a new business or as a growing business by being cheaper than the cheapest. A, you won't return any profit because there's nothing left on the bone to actually bring income of a decent level and profitable level into the business. And secondly, and more importantly, you are giving out really negative signals. If you come in too cheaply, you could be unwittingly telling the marketplace that you're not confident in actually holding your prices to a market level that everyone understands and is working to. You come in too low, you actually tell people you're not confident, you're not that competent, and you really haven't got a good grasp of your market pricing. Another thing you need to look at is environmental sustainability. People are really concerned about buying the right products and services that inflict as little damage on the environment as possible. Some of you may actually have to work to specific legislation in this area. You need to think about attitudes and requirements and ways of running your business sustainably and in a way that's kind to the planet. Because again, these are new requirements, new expectations from your customer set and from your marketplace. And then you need to look at the technology required within the business. What is expected by the sector, the marketplace, the customer? What can you bring into the business to help you run that business operation smoothly, efficiently, with very few inaccuracies and to a good quality level? All these are pieces of data and information that should be drawn together, because this is going to help you as a startup, and this is definitely going to help you grow the business. So we move on to market and customers, and I'm just going to go over the difference between the requirements of a business to business customer and a business to consumer customer. So B2B customers will have very, very practical considerations. The timing of you delivering products and services to them, the quality levels they expect, the quantities they want from you, and they may actually want to work on just-in-time provision when it comes to delivery requirements. What are the payment terms? Now, business-to-business customers have lots of practical considerations, so they are less swayed by non-business influences. And something that's really important is that it's worth knowing and asking the context of why they need certain products and services. Is it because they're growing? Is it because they are finding it more and more difficult to compete in a crowded marketplace? So knowing a little bit more of the why behind the what they want will give you a closer knowledge and a closer association with that customer, and you may be able to work in conjunction with them to move your business forward and theirs by being closer to them and being a much closer and more successful match to what they need than your competitors. Now, moving on to business to consumer, B2C, they have a mix of practical requirements and some more emotive considerations. They have more wants than needs. Quite often they want something just because they like that particular brand, that particular model, that particular item. And again, with emotive considerations, they may be purchasing items and products and services to belong, or to stand out, or to blend in, to feel better about themselves, feel more confident, maybe to surprise or spoil someone, impress their friends and relatives and their colleagues, and so on. So again, you can use a more more exciting and complex mix of emotive considerations within your marketing to appeal to a business to consumer customer group. Both groups will have seasonality, and something else that you're going to have to take into consideration is the confidence building and the reassurances that you're going to have to constantly market to them, and particularly about your ways of working being explicitly communicated, because they need to know that they're safe, your employees are safe, your supply chain is safe, and any physical touch points in contact with the businesses and its products and services are all safe. So when we look at marketing now, there's an additional fillet of information you need to be adding, which is going to build that confidence and that reassurance that you are doing all you can within your business operation to be COVID safe. Now, business to business relies on contract law. So basically, it's the discussion between yourself and the customer, and you're both businesses. So there is an expectation that you will both know where you stand. It relies on discussions, emails, a sales contract, and outline paperwork that the two parties agree on during the negotiations. Business to consumer has much more protective laws in place, because as a business owner, you are considered to have a superior knowledge. ignorance is no defence. You need to know exactly what consumer law protects your customers, and because they're deemed to have a lower level of knowledge and you have more of a responsibility in law to be transparent, truthful and fair with them, you'll find the legislation, trading legislation for a B2C customer is particularly strong. You need to know it and you need to stick to it. In terms of competitors and pricing, I've mentioned the importance of pricing before. Look at the best practice methods of good competitors. If there's a business that's long-standing and it has a really good reputation and it does things really well, if you're a business that's starting out or a business that's looking to grow, then it's very, very important that you look at the best practices in your sector and in your area in the competitive marketplace, and make sure that you are working to those same levels. Find out what's good, what's bad, what's indifferent, and again what these competitors are saying about themselves in their marketing communications and where they are doing that communicating. Generally it's going to be websites and social media. And what you need to do, because it's very difficult these days to be new or have a unique selling proposition. The new ideas are all but gone, but it is still possible to establish ways of standing out and excelling in certain areas of the way you run your business and the way you look after your customers. And as I've said earlier, it's really, really important to find out the pricing spectrum that operates within your marketplace. Do not ever be cheaper than the cheapest, because that just stops you from being taken seriously and considered as a potential seller of products and services to your target customer group. Now, in terms of operations and capacity management, it's very important for you to work out what your unit of sales is. What are you selling? Now, essentially, if you're a manufacturer, it's stuff you make. If you're a retailer, it's stuff you buy in to sell on. If you're offering services, restaurants, takeaways, you're doing driveways, then you have to look at your unit, your product or your unit of sales. So, for instance, my unit of sales is a day training, a half-day training. It could be a project that I'm doing for a client, and it could be hour by hour support and mentoring. So I've looked at the marketplace and I've looked at the costings of all those, and I come in within those pricing expectations. But also what I need to do is look at my own capacity in terms of how much time I have each week to look after clients, what commitments are already booked in, what remaining time I have, and also what time I need to take into consideration to actually be running the business and doing the paperwork and following up enquiries and so on and so forth. So what you need to do is you need to work out your unit of sale, the resources and time involved in delivering that, the processes you're adopting or utilising within your business operation that's required to make and deliver these units, and how many you can cope with in a day, a week, a month, because this essentially is your capacity, and it really, really is important to manage your capacity. Make only the promises you can keep and keep every single promise you make. If you can't manage your capacity and things get really, really busy and you don't want to turn that business away, then what you can do is maybe outsource when you're at your peak, so you have other companies that can help with delivery, so you can meet that peak with additional resources. There's another thing that you can do, another method of capacity management, which is incentivizing. So what you're doing is you're doing some sort of special offer or some deal or some financial incentive for your customers maybe to buy slightly out of sync and flatten that peak so that you've got a more consistent level of business and a consistent level of units to deliver at any one time. Quite often companies will do this by having maybe sort of some saving for buying early, maybe some savings for buying last minute when they know that they've delivered on every other order they've got and there's a little bit of capacity left. So it's for you to work out how you can and when you need to either outsource, incentivize, or sometimes simply, if you're a very small business and you can't do either, just to work longer hours for a short period of time without burning out and without letting your customers down and without letting your standards slip. And quite often when you're looking at a growth phase, there is this growing pain. How do I go from that level of business and throughput to a slightly higher one? Again, when you're thinking about growth, you need to have a look at your capacity management and how you are going to deal with additional business coming through and deal with it efficiently. Now, it's very important, as I said earlier, to make sure that your business operation is COVID safe. At the moment, gov.uk is the principal place that you will go to for this guidance. So there's guidance that is there for businesses operating, and it's general guidance. It's guidance for employers and businesses on how to operate in a COVID-19 safe way. Then there's additional guidance for different kinds of workplace settings. So you might be in a factory, you might have canteens, you might be running a transportation service. So what gov.uk has done, it has looked at these different workplace settings and produced additional very specific and tailored advice to help you be COVID safe in those different working environments. So gov.uk is the core source of information. You'll also find the Health and Safety Executive is taking this information and working with it as well. So the Health and Safety Executive and gov.uk are the two principal areas that you will go to for this kind of guidance. You will also find that certain sectors, specifically those that have workplaces that have to have more specialised arrangements where you are closer physically to your customers, and I mean literally physically, it's working safely, it's working at a safe distance, but it's also recognising that sometimes that isn't possible. So what measures do we take to ensure that we are safe? So Health and Safety Executive, some of the sector specific federations are also helping with these guidelines, and gov.uk is the core source from which all this information transmits out. Now we move on to business finances and what you need to work out. Now, the first thing you need to do when you start a business and you're preparing to start a business is you need to work out how much does it cost for me to live? You know, if I run a car, if I go on holiday, clothing, food, drink, gym memberships, mobile phone. So you need to work, and your rent, and obviously your mortgage, rates, utilities. So you need to work out your personal living expenses, because once you've done this, this is essentially your basic wage. This is what in the early days of the business you'll be aiming to bring in, as well as your operational overheads and any sort of seasonal one-off or quarterly bills. So you need to think about your basic wage. How much do I need to be taking out of the business once I can afford to take a wage from the business? What's going to cover the cost of me keeping me? Then carefully work out your startup costs. What do you need to buy new? What can you acquire second hand? Can you lease certain pieces of equipment? And also, do we already own stuff? And the term is it's pre-owned and introduced to the business. What you can actually do is you can take items you already own, like a laptop for instance, and say, okay, I'm going to find out by looking on maybe Gumtree or Facebook Marketplace or eBay, what is a reasonable second-hand price for this piece of kit? Could be a laptop. You find that out, you keep a screen grab, you actually raise an invoice from your business to yourself, and then when the business can afford it, you can actually refund yourself for the cost of giving that item to the business. In fact, you're selling it to the business. You need to look at seasonal expenses, so insurances, annual payments, or can you spread these monthly? So what you're doing again is you're flattening out your annual running costs into very similar monthly amounts. For instance, I have a professional indemnity insurance. It costs about £400 a year. I've just paid it because it has to be paid early May. Now, once upon a time, I did pay that on a monthly basis just to flatten it out. But I just took a preference more recently in the last couple of years that I just wanted to pay it and get it out of the way. Again, it's down to you, but make sure that you have enough money coming in to pay your business bills when they're due. Other things you need to be thinking about are your ongoing expenses. So these are things that are coming up every single month. They're not, quarterly or half yearly or annual. It could be rates, rent, utilities, monthly operational expenses. It could be a monthly contract for your mobile phone that you're using for the business. It could be things like hosting fees for a website. And you need to be looking at what your profit is likely to be within your first year and what level of tax you're likely to pay on that, because you need to start putting a little bit away each month towards any taxes that might be due. If you don't pay as much tax as you anticipated, then that money is quite happily sitting within the business. But what you don't want when the business is quite new is not to have taken those potential tax payments into consideration, and you're due to pay them on the 31st of January and the 31st of July, and you haven't got the money. So make sure you don't trip up. Keep putting something aside every single month for taxes, and also keep something aside in what we call a contingency fund. And this is just a little bit of money that's a buffer. So if you have an unexpected expense, or if you have a cheeky little deal on, say, some marketing or to buy a piece of kit, then you can cover the surprise bills that might come your way that you didn't anticipate and they just came out of the blue, with the best of intentions. But also, if you get one or two opportunities, they're going to take a little bit of money. You've got the money to capitalise on that. Staying with finances, as a business startup, you need to be thinking about how can I exist for the first few months while my business is just getting that little bit of traction and it's starting to generate that revenue. So do you have savings? Can you cash in any investments you might have? Obviously don't cash in pensions, because that is really not recommended, and it's a short-term gain, but it is a long-term hit that you take. We've learned through COVID-19 and the lockdown that there's a lot of stuff we really don't need, and we've probably been surrounded by a lot of it. So have a look, do you really need as much stuff as you've got? Can you sell some of that, and that money can go towards the business or towards keeping you and your personal expenses covered until the business can afford to pay you a wage? If you're a certain age, you can think of Bank of Mum and Dad. You can also think about a personal or business overdraft or a line of credit from the bank or a credit card. I'm not recommending you go into debt. that is not a good way to start any business. But the reality is a lot of people actually do lean a little bit heavy on their personal credit card, or they might have a personal overdraft, and that gives them a little bit of a cash flow buffer in the early months. As I say, I'm not recommending it because it's not a good way to move forward, because not only do you have to cover your personal survival costs and the business costs, the operational costs and your taxes, but then you will also have a credit card or a loan to pay off. And for a lot of people at the start, that is just too much. Some people may even take a part-time job. So remember, these are not recommendations. This is just the reality of how some people survive in the early months. But you do really need to work out how you live and eat and how you're going to meet your early expenses, not only on a personal level, but running the business and funding your first few jobs and your first few orders. One really effective way, and this is a very, very important tool for the business, is to have a cash flow analysis. Cash flow essentially is the timing of money coming into the business from investments, loans, grants, savings, and making sales. These are the incomings or the inflow. And the timing of money going out of the business on a month-by-month basis to pay the business overheads and expenses, your taxes. And when you run a business, you only pay yourself if there's money left to pay yourself. If you haven't made enough money to cover your wage, then you can't just take it from the business. All other expenses take priority over your personal income. So essentially, you live on beans on toast. So a cash flow analysis is an important document. It'll tell you when you need to subsidise the business, or when it will show you when you're going to be busy mid or peak season. And again, this information to help you plot this will come from your research and from looking at all the data and the costings that you can pull together for the business start and for the business growth. So cash flow analysis is something that you do, and it literally looks at the current month and forward 12 months just to see what money is likely to come in and go out. And of course, if you are thinking of growing the business, then again, this is an essential tool. Now, the cash flow template that goes with these slides does have what we call a sensitivity analysis. So the cash flow document itself will show traditional cash flow on the first worksheet. If you look on the tab on the bottom, you can go into the next worksheet, and what it does, it explains what a sensitivity analysis is. So what that is you do cash flow, you look at those figures, you leave them as they are. But then you'll do another cash flow version, and then you'll say, well, okay, if we bring 5% more sales in, or maybe 10 to 15% more sales because we are growing our business, what does that make our cash flow look like at the end of each month and the end of that 12-month cash flow prediction? You can go the other way as well. What if we bring in fewer sales? How is that going to leave us in cash terms and profitability at the end of each month for that 12-month period? What if our overheads are slightly higher and our running costs are slightly above what we predicted? How is that going to leave us in terms of our cash left or cash owing at the end of each month? So this is a really, really good tool for the business. And if this is the one analysis you do, if I was to say the most important analysis for you to do, it would be the cash flow, because that is going to tell you when you're likely to need money. It's also, if you've done good research on the seasonality of your business, it's going to tell you when you're going to be normal flow month, maybe a really, really busy month, and peak months, and also very quiet months. And it's a bit like being an ice cream salesperson at the seaside. They will make in a summer season everything they need to live on for the entire year. So they're going to make enough money during the summer to live through the winter months where the weather's awful, no one's going to the seaside and no one's buying their ice cream. So their cash flow analysis is going to show a massive peak for maybe 4, 5, 6 months and then very little for the remaining 6 months. And on a similar basis, if you learn the trading trends and the seasonality for the products and services in the sector you're going to be going into, then that's going to be very, very informative for you. And again, as I've said, if you're looking at growth, again, a cash flow and a sensitivity analysis, so just playing with those figures, making them a little bit higher in certain areas, a little bit lower in other areas. What does it look like when we run these figures through in slightly different ways? Is it going to give us the figures we want? And also, if we look at a month where it's a little bit of a dip, then what we need to do is market more and sell more and engage with people more in the busier months. So what you're doing is you're lifting that peak, and then the trough that follows it naturally won't be as deep. Now, moving on to marketing and sales. Take a really, really close look at the market that you're aiming for and the type of customer that you're targeting. You need to be finding out where they go for information and guidance, and also what kinds of things influence them. If they go for information on Facebook or Instagram or LinkedIn, that's essentially where you need to be marketing yourself, because those are the watering holes that your natural target customer set goes to. So you need to be marketing yourself and raising awareness about your business and yourself and your capabilities and your products and services in those social media forums and in those environments where your customer goes for information. And you need to think about your communications and engagement method. So communication is just giving messages out, but engagement is getting some connection, some response and some interaction from your target customers. So in social media, which social media platforms are we going to be communicating on? A little tip here, don't try and be absolutely everywhere. It is more productive and more successful if you look at maybe 1 or 2 social media platforms and do those 1 or 2 platforms exceptionally well. All the platforms are big enough for you to be able to operate just across maybe 2, 3 at a maximum and get good traction and good awareness levels. If you try and do too much across too much, it takes too much time. Each of those platforms needs your communications message to be slightly nuanced and more appropriate for that platform, and it will just dilute your efforts. So do a couple and do them really well. Make sure that you are thinking about how frequently do I need to be on this communications platform? What engagement methods can I use to get some response from my target customers? So it could be asking questions, could be giving them the inside track on something, could be sharing something with them that they're going to like, maybe respond to, and maybe start to engage with. And whenever you have any kind of media communications, it's important to have a call to action. So if they like what they see, if they like what they hear, what can they do? What do they need to do to contact you, to get in touch, to talk further? Is it click here, email this, use this email address, call this number, fill in this form, download this guide? A call to action goes from a passive, just pushing it out there message, to now you've heard this, this is what you can do to create that connection with us and start to talk to us and potentially buy from us. And another thing to think about is it's not about you selling what you've got. You need to learn what the customer wants and how they want to be communicated with. It's not about what you sell. People do not care one jot about what you do. But what they do care about is what you do for them. So everyone is acting naturally and quite selfishly. So you always have to market and sell from the customer's perspective. It's about learning and understanding their needs and their influences and communicating in an entirely customer focused way. And that means that they will know that you're talking to them. It also means that they're going to get a clear message that you've taken time out to find out what's important to them. And they're going to be a lot more responsive and a lot more likely to get in touch with you, because they know that you've worked hard to actually understand them. And if you want to know what, a customer's wants and needs are, a target customer's wants and needs are, very simple. Ask them. You can do a very simple poll. A lot of the social media platforms now, LinkedIn, Twitter, Facebook, allow you to set polls and ask maybe 3 or 4 or more very simple questions. You can do more complex one on something like SurveyMonkey, and all these tools are free, but they do help you learn more about your customer, and they do help you find out more about how to serve them properly and engage with them and communicate with them and get them ultimately to buy from you. But it is based on them knowing that you recognize their needs, you're working to those needs, and you're building up that trust and that engagement, and actually lowering the risk by building up the confidence levels and the reassurance levels that they know they will be looked after. And all that hard work is down to you. Now, a little bit about the formalities. So with your business, you need to decide what is the best business format to start out with. And as the business grows, what business format is going to be ideal and more productive and maybe more tax efficient for the business. A lot of businesses start out quite simply as sole trader. Very simple. You just get up in the morning and go, right, I'm now in business. I'm going to start telling people about my products and services. I'm good to go. A sole trader partnership is where 2 or more people actually work in a sole trader business. So that's, you are self-employed. You're not a limited company. You're not a social enterprise. You're not like a limited partnership. With a sole trader partnership, HMRC will want one person in that partnership to be the nominated partner. And this is the person that HMRC will deal with. And that person is the person who will actually contact HMRC and do all the mandatory reporting and tax payments. They do it on behalf of the partnership. You might be a limited company, and I know when I started my company, me and my husband started our company 20 years ago, because we were going into consultancy, we decided from the outset that we would be a limited company and we would be VAT registered. And that's because certain marketplaces have an expectation that you are going to be A, a limited company, and B, a VAT registered company. So for some of you, that decision might be made for you by the marketplace. You may also consider being a social enterprise. Now, a social enterprise in itself is not a business format. What it is, it's an ethos. So again, you can be a social enterprise that's a sole trader. You could be a CIC, which is a community interest company. You could be a company limited by guarantee. So that's a limited company essentially, but each partner within that social enterprise, their liability and exposure is limited just to their percentage of ownership and input. If there are going to be more than one person in the business, it's essential that you have a partnership agreement. These are sort of the rules that you agree within the business on how decisions are going to be made, how growth is going to be decided upon and achieved. And it's essential the rules you build between yourself as partners on how you run the business. I always call this almost like a prenup for the business. Know who you're going into business with, and know how they like to make their decisions. And then you need to collectively write down and set rules for maybe levels of spend, so that one partner in the business will not spend above a certain amount without the other partner being party to that and fully agreeing with it. So get a partnership agreement in place. Again, if you want one, contact the university and I can supply one. What you need to do is take the document, make whatever amendments you want in terms of how you want to run your business, but then get a legal specialist, a commercial specialist, to look at it and just ensure that it's fit for purpose. You either register with Companies House if you're going to be a limited company, and you register again on gov.uk. That is the website that runs the country. So go on to gov.uk, you'll see a little search box there, and you can put in self-assessment, and that will take you directly to the page where you fill an online form in, and that gets you registered as a self-employed person. What you need to do is, there's a mistake, it's actually registered for PAYE, but you register for VAT at £85,000 turnover level, or again, as we did in our business, you do that below, but on a voluntary basis. Get yourself a business bank account. Do not run a business through your personal bank account. A, the bank won't like it. And B, more importantly, if you did have a randomised tax investigation and you can't quite clearly prove the distance and the difference between personal payments and income and business payments and income, a tax inspector is simply going to move it all into the personal income column and you'll get taxed on it. So make sure you've got a business bank account. There'll be certain facilities that are more beneficial and more appropriate for businesses through a business account. It does not cost you a lot of money to run a business account. Again, our business, we've been going 20 years, we have a good level of revenue through it, and our business bank account costs us about £6 a month. Do a business plan and update it regularly, and make sure again within that business plan you have a cash flow forecast in that. If you're going to go for an overdraft or a grant or any kind of business borrowing, the expectation will be that you will have to do a business plan, and you will have to submit that along with at least 2 years cash flow, and that's what a lender will look at to assess whether you'll get that grant, whether you'll get that loan, or whether you'll get that overdraft. But do a business plan anyway and update it regularly, particularly, as I say, in the infancy of the business, where you might actually refresh it each month. And what I would do is, rather than just going into the original business plan document and updating that, do a version 2 and a version 3 and a version 4, because what you can do is you can have a look at the history and the organic growth of the business, plan by plan, and just see how that business has moved forward. If you just go back and update the same document, you will have something that's up to date, but you won't be able to see a very useful history that you can go back and track key decisions, key triggers, key pieces of information you found that helped you move your business forward, and particularly in terms of growth. And another really important point is to become an obsessive compulsive receipt collector. Make sure that if you buy anything, even at the pre-start stage, before you've started your business, if you are running errands and you're buying stuff ready for the business, all those expenses need to be tracked. All those receipts and invoices need to be put together and put into your financial records. Because what that does is, if you have a really good first year and you're likely to pay a lot of tax, you can quite legitimately look at your pre-start expenses and put those into the expenses of running the business for the first year. and that will leave less money on the table to be taxed. This is quite legitimate, but if you don't keep invoices, if you lose them, if you don't ask for them, even if I put £1 in a parking ticket machine, I will take that ticket home, I will put that into my expenses, and that means that's £1 that is, you know, £1 less sitting in my profitability, £1 less that's going to be taxed. So do become an obsessive compulsive receipt collector, because that is a tax efficient way to work. It also means that your financial records will be complete, they'll be accurate, they'll be up to date, and you'll have an absolute defined amount that you know you're likely to be taxed on, and there'll be no surprises and no sloppy record keeping. And in terms of record keeping, because we've gone through Making Tax Digital, any business that's VAT registered has to keep their business accounts on a piece of software, a software platform like Xero or like Sage. A lot of the mainstream platforms now can report directly onto Government Gateway your turnover figures and your revenue figures and your business operational figures, and from that then HMRC can make an assessment. So be an obsessive compulsive receipt collector, find appropriate software on which to record your business incomings and outgoings, and make sure you're on top of them. So it's just a bit of a summary here. Research as much as you can. Make sure that you are quite slavishly pulling together as much information as humanly possible. This is so important. Look at your market and the type of customer you're targeting. Look at the competitors, people who are already there in the marketplace and coming into the marketplace and trying to sort of get their fair share of customers. See how they operate and really benchmark yourself against the best of the best in your competitors. Also have a look at the pricing spectrum. Doesn't matter if you're value or mid or exclusive end of that pricing spectrum. Be on it. Don't be above the top end or don't be below the low end, because again, it's very difficult for you to give those confidence signals. Business operation, make sure that you are managing your capacity. Be COVID safe, because this now is a new and it's going to be a permanent expectation. So you need to be sharing with your customers and anyone else who's interested in the business how you're safeguarding your customers, your employees, your suppliers and your systems. Know your figures, your personal and business expenses. Try and work out what taxes you're likely to pay and make sure that you're putting money aside for that, and work out what your interim survival plan is going to be while the business is getting a footing and starting to get a bit of money through the door. Remember to do a cash flow analysis, and again update that fairly frequently in the first few months and the first year or so of your business as a startup, and definitely do one if you're growing the business. And then whether you're starting up or whether you're growing the business, have a look at how you should be operating your marketing communications and how you should be conducting those sales. And do not forget the formalities, HMRC, VAT, and any other formal reporting systems that you need to be aware of as a business dependent on your sector. Now, there's a lot of free business support out there. It's just knowing where it is. So Staffordshire University, the Be Inspired scheme, is a mentoring program that's run for many years very successfully, and it has had some absolute stars come out of that who are still running and growing successful businesses. Your local Chamber of Commerce is also a good resource. Local enterprise partnerships, this is the local authority and local business support delivery organisations working together. They all offer free support and mentoring, particularly to businesses starting up. And there is specialist mentoring for businesses that are growing too. So it's important just to sort of scour your local marketplace and see where you can get that free support and provision. And also just some updates on the Enterprise Zone at Stafford University. These are some of the facilities and some of the support and mentoring programs that the university has available for businesses who are starting up and businesses who are growing. There's an incubation centre, a launch pad, there's different funded support programs for small to medium enterprises. There are labs and workshops and facilities at the university that business can have access to. The students and graduates and researchers who have specialist knowledge that they are gaining for particular sectors and business types. New product development, prototyping, innovating processes, productivity improvements, so how to run a really sort of efficient operation, continued professional development. And then in manufacturing, there's digital, well, it's not manufacturing, but there's manufacturing and materials. So new materials, advanced manufacturing methods, which are being developed by the university in association with local businesses, and also digital advancements and the adoption of more digital and more technology in the business to make it run efficiently. To be part of any of these programs, it's very simple. If you email employers@staffs.ac.uk, employers@staffs.ac.uk, then they will be able to signpost you to the most appropriate form of support for your business and for the current status of your business. Hopefully this has been informative for you. I have been advising and supporting businesses for 20 years, and the very same staples that apply to a business startup also apply to a business that's growing. So the university has a lot in terms of support and facilities that you can tap into. So get in touch and start talking. Thank you very much from Jane Pallister.